Folks, imagine being a homeowner for 15 years and have no equity to show for it. I'll get into that and then the latest home prices and insights for York Region for week ending June 19th, 2024. How often do you change your iPhone or whatever phone you use? I think I update to the newest model. I think it's about every 2 years now. Do you know there's people that do that with their house? You know, hindsight is 2020, but looking back, we can see where we've made mistakes. And I'm bringing it up hoping that future we don't make the same mistakes. But there's people that bought a home, values went up, sometimes a lot, and they sold their home to buy another home. That next home was not a lesser expensive home, it was a more expensive home. So their home values went up, say, in a couple of years, $200,000. The next home that they buy is $200,000 more, but it's a bigger, fancier, shiny home. And every 2 or 3 years, they were selling and buying, selling and buying. And each time, bigger, better, shinier. And what happens over the span of 15 years or so of doing that, you have very little or no equity to show for it, because you might have some money into it, but your mortgage is so much bigger. And then mortgage payments balloon with these interest rates. And life is really, really tough. And yeah, you're in your fancy, shiny home, but man, life is really hard because of all these changes that have happened with the economy and interest rates. But there's other people, those neighborhoods you moved out of, that have stayed put for 10, 15 years. Life is different for them. They maybe don't have the fancier, shinier home, but they're sitting on a ton of equity. They've managed to pay down their mortgage. So with them paying down their mortgage and values going up, those are the ones really taking advantage of the increase in values. And I know all the TV shows and lots of people, buying and flipping and selling and moving into a better home. And how can you afford this big home? Well, I couldn't if I started in this home, but because of how values went up over the years, I bought and sold, and now I got this bigger home. But if each time you're stretching to your max, you're not really building up a lot of equity. In a lot of cases, you're just not doing that, and you're stuck today. But that's modern day mentality. That's not the way our parents thought about things. It was get the home, stay there, pay your mortgage like it's rent. You need a place to live, right? They didn't believe in renting, and it was about buying the home and staying there for a long, long time. Many of us remember the home we grew up in because we were there for years. It wasn't flip, 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 buy, buy, buy. And the parents built up a bunch of equity. And then the economy rewarded those people with values going up and up and up. But they stayed. They didn't take that value to dump it into something else where their mortgage now was so much more. And that's, I guess, the lesson. If we could learn something from the past, again, I'm not trying to say, I warned everybody. Hindsight's 2020. But a lot of those people today are in trouble because of wanting the faster, shinier, bigger. And sometimes it's okay just to stay put. If you're comfortable, stay put. Let the equity build up by you paying and values going up over time. You'll be better off. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. If you want to speak with me about your real estate situation, selling, buying, it's really simple. Up here, there's a link. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you. We'll talk about whatever's on your mind. Now, let's get into the numbers. Here we go, folks. York region. I will be focused on detached properties only for Vaughan, Markham, Richmond Hill. This is a quick summary of average sold prices. We're going to start off with Vaughan. 29 detached properties were sold for week ending June 19th. Look, it looked for a while there for, when I say a while, a good 2.5 months. Sales were trending up. But this week, plummeted down. We went from 46 to 29 detached properties sold. Average sold price up from the previous few weeks. It's now at $1,857,000. But over the last month and a half, average sold price have been hovering just north of 1.8 million. And that's where we are now, 1,857,000. Compared to last year, 1,857. It's 3% higher than where we were this time a year ago. The median price is 8% lower. I don't have a full handle on why the median price dropped so much. I mean, I can tell you mathematically what happened, but why, we need to see over the next few weeks what transpires there. Maybe it'll just kind of correct itself there. But average sold price, when you look at the dotted line, the 4-week moving average, you could see average sold price over the last 2.5 months has been trending upwards. 29 were sold, 38% sold at list price or more. Listings, 108. Listings are climbing. Active listings are also climbing. We're now at 454 active listings. So think about this for a second. 29 were sold, but that's out of 454 that are available for sale. So the sold versus how many to choose from, it's not a big percentage there. Months of inventory shooting up. It's now sitting at 3.6 months of inventory. Pretty much a balanced market. That makes it hard to explain why average prices are trending up. It kind of looked like months of inventory was trending down for a while, but this week it jumped up. And like I say often, over the next few weeks, we're going to see which way that trends. Is this now normal that we're in a 3.6 plus months of inventory in a balanced market, or is it just a weird week and it's going to come back down to the mid 2.5 months of inventory? We'll see. That's Vaughan. Richmond Hill, 20 detached properties were sold. Half of those, 10 sold at $2 million or more. Average sold price, not a surprise, $2,068,000. And half the properties are selling at $2 million or more. Where do you expect average sold price to be? So $2,068,000. $2,068,000 is 2% lower year over year. The median price is up, but rounded. There's no percentage change in the median price. 20 were sold, we said, and half. So we said half sold at $2 million or more. Half sold at list price or more also. Listings, active listings is climbing up. We're at 432. 72 detached properties were listed during the week of June 19. And months of inventory up from the previous week, sitting at 5 months of inventory, right at the top end of a balanced market headed into a buyer's market. Here's Markham. 23 detached properties were sold. Average price just seems like it's going one way right now for the last 4 weeks. Excuse me, sitting at $1,871,000. 1,871 is 5% higher year over year. The median price is 3% lower year over year. The dotted line, the 4-week moving average, kind of shows that prices, average and median prices, are trending down, but gradually. 23 were listed, 23 were sold. 61% of those sold at list price or more. 84 were listed. These are detached properties only. 84 listed. Active listings is increasing. There's 350 available, 350 available detached properties. I'm going back 23 were sold, but 350 are available. Lots of choices. Months of inventory in a balanced market sitting at 3.5 months of inventory. The fact that average prices are kind of trending up goes against the general supply and demand rule. As months of inventory increase, we would expect prices to come down. Now, it's not an exact science, and sometimes there's a delay, and sometimes when you're dealing with sales this, not sometimes, often when you're dealing with sales this slow, a few sales can skew the numbers one way or another. So the lower the sampling, the harder it is, or more difficult to really get the right trend going, just because of the fact that one or two sales affects the overall number. But here, quick summary, we're pretty much in a balanced market. In some neighborhoods, we're going to see a buyer's market, but it's pretty much a balanced market when it comes to detached properties. And you're going to go into neighborhoods, and if you're looking to buy, you're going to put an offer, and there's going to be multiple offers, or homes are going to be selling really quick, and you're going to say, what's going on? Santo said it's a balanced market. It's very neighborhood specific, price point specific. Some areas more aggressive than others. Other pockets, properties are sitting there. You got time to think about things. Thanks for watching. Have a nice day.